Welcome back, everyone. As always, it is a blessing to be here. Before we jump in, if you're finding value in these breakdowns, go ahead and hit that like button, drop a comment down below with your thoughts, subscribe if you haven't already, and make sure you ring that notification bell so you never miss an update when I post. Today, we're diving deep into something most XRP channels completely gloss over: ISO 222 and the global banking infrastructure that's being rebuilt right now, and why XRP isn't just another crypto waiting for a pump, but the settlement layer that's already being wired into the system. First thing I always do, I pull up CoinMarketCap and give us the full picture. The total crypto market cap is sitting at $2.2 trillion. Bitcoin dominance is sitting at 58%. Fear and greed is at 30, which puts us in extreme fear territory, and I'll tell you what that means for XRP in a moment. XRP is trading at $1.11. That's up 0.92% in the last 24 hours. Bitcoin is at $63,964. Ethereum at $1,795. Now here's my read. We're in a consolidation market with extreme fear, but XRP is holding its ground better than most alts. And when you see that kind of resilience in a risk-off environment, it tells me something bigger is building underneath. Now, with that market picture in mind, let me show you what's actually happening with XRP right now, because this is where the story gets interesting. XRP at $1.11, up 0.92%, and at first glance you might think that's just treading water. But look at the context. Bitcoin ETFs just closed out what CoinDesk called the most overwhelming $2.7 billion sell-off we've seen, with another $85 million net outflow yesterday. Ethereum's up about 3%. Most altcoins are red or flat. And XRP is green, is holding structure, it's absorbing selling pressure like it knows something the market doesn't yet. Let me pull up this article from CoinPaper. XRP Ledger rolls out all-in-one AI hub for agents, tools, and real-world payments. Right here it says the XRPL just launched an integrated AI infrastructure that connects autonomous agents directly to real-world payment rails. And if we scroll down, this part right here is the one I want you to focus on. It's not just theoretical, they're already running live transaction testing with AI systems that can initiate cross-border settlements in seconds using XRP as the bridge asset. This is massive because it's not about speculation anymore, it's about utility that's being built and deployed right now. Every AI agent that needs to move value across borders just got handed a tool that uses XRP by default. Now let me pull up this one from CoinEdition. XRP Ledger nears major upgrade as Validator support clears key mark. The article breaks down how Validator consensus just crossed the threshold needed for one of the most significant protocol upgrades in XRPL history. And here's what matters. This isn't a cosmetic upgrade. This is infrastructure level optimization that makes the ledger faster, cheaper, and more scalable exactly when institutional adoption is starting to ramp. The timing here isn't coincidental. When you're building rails for banks to settle trillions of dollars, you don't upgrade randomly, but you upgrade when you know the volume is about to hit. And this connects directly to what I've been saying for months about ISO 222. This is the messaging standard that every major bank, every central bank, every financial institution in the G20 is adopting right now. It's not coming, it's here. Swift's FN message system, the old rails that moved $5 trillion a day, is being replaced. And the new system, it requires real-time settlement, atomic transactions, and cross-border interoperability at a scale that the legacy correspondent banking model physically cannot handle. You cannot batch process your way through ISO 222 compliance. You need a distributed ledger that settles in 3 to 5 seconds, costs fractions of a cent, and has the liquidity depth to handle institutional volume. That's not Ethereum at $1,795 with gas fees. That's not Bitcoin at 10-minute block times. That's XRP. Let me pull up this article from SailGP. 5-minute Ripple prediction markets for short-term XRP traders. Now this one's interesting because it shows you how quickly real-world use cases are being built on top of Ripple's infrastructure. Right here it says prediction markets with 5-minute settlement windows are now live, using Ripple's liquidity pools to enable instant payouts in XRP. And if we scroll down, this part is key. The markets are processing thousands of microtransactions per hour with 0 failed settlements. That's not hype. That's proof of concept at scale. When you can run high-frequency prediction markets that settle in 5 minutes using XRP, you're proving that the infrastructure can handle anything Wall Street throws at it. Now here's where it gets even more interesting. Let me pull up this one from thestreet.com. U.S. judge behind landmark XRP ruling deals fresh blow. The article reports that the same judge who gave Ripple the partial win in the SEC case just ruled against the SEC again in a separate matter. And if we scroll down, here's what I want you to see. The judge is establishing precedent that retail sales of tokens on exchanges do not automatically qualify as securities transactions if there's no investment contract. This is huge because it's not just about XRP anymore. It's about the entire framework for how digital assets get classified. And every ruling like this makes it harder for the SEC to backtrack and gives institutions more legal clarity to enter the space. That regulatory clarity is exactly what's been holding back the floodgates. And that fear reading I mentioned earlier, there's a real reason for it. Let me show you what's driving it. Singapore's Temasek investment fund just announced they're pulling out of crypto entirely and focusing on AI instead. That's a sovereign wealth fund with over $400 billion in assets saying crypto is off the table. Now on the surface, that sounds bearish. But here's my take. This is actually the cleansing phase the market needs. The speculative tourist money is leaving. The funds that were chasing dog coins and NFT bubbles are rotating out. And what's left? Infrastructure projects with real utility. Projects that governments and banks are actually using. That's XRP. When weak hands sell in extreme fear, smart money accumulates. And if you look at the exchange flow data, that's exactly what's happening. So here's where the technical picture comes in. Let me pull up the chart and walk you through what I'm seeing. XRP is trading at $1.11 right now, and that level is significant because it's holding right above the $1.08 support zone that's been tested 3 times in the last 2 weeks and held every single time. That's not random. That's institutional accumulation. When a price level gets defended that aggressively in a risk-off market, someone is building a position. Now on the upside, the resistance we need to clear is $1.15. That's the level that's been the ceiling for the last month. And if we break through with volume, the next major resistance isn't until $1.28. That's a 16% move from current price with very little in the way. On the weekly chart, here's what I'm watching. We've been consolidating in this range for 6 weeks now, building a symmetrical triangle that's getting tighter every week. And historically, when XRP compresses like this, the breakout is violent. In 2023, we saw a similar pattern. 5 weeks of tight consolidation, followed by a 40% breakout in 11 days. In early 2025, same setup, 8 weeks of compression, then a 56% rally in 2 weeks. We're in week 6 right now. The spring is coiled. The question isn't if it moves, it's which direction. And based on the fundamentals I just walked you through, I'm betting up. Now volume tells us a lot here too. We're seeing consistent buy side volume every time XRP dips below $1.11, but the sell side volume is decreasing. That's classic accumulation behavior. The sellers are running out of ammo and the buyers keep showing up. When that dynamic flips and we get a volume spike on the breakout, that's when the momentum traders and algorithms pile in, and that's when you see those vertical moves XRP is famous for. And this is exactly why the chart level I'm watching matters so much, because it's not happening in a vacuum. Let me show you what Bitcoin's doing and how it connects. BTC is sitting at $63,964, up 1.2%, and it's in a very similar setup. Bitcoin's been range bound between 60K and 65K for 3 weeks now, just chopping sideways while everyone waits for the next macro catalyst. And here's what's interesting. XRP and Bitcoin are moving together right now, almost tick for tick. When BTC pumps, XRP pumps. When BTC pulls back, XRP pulls back. But here's the difference. XRP is holding its lows better. Bitcoin touched 59K last week. XRP's low was $1.06 and it bounced immediately. That tells me when Bitcoin finally breaks out of this range, XRP is going to outperform. Now let me give you 2 historical parallels that show you why this matters. In November 2024, Bitcoin was consolidating around 58K for almost a month, and XRP was sitting at 90 cents doing nothing. Everyone thought the rally was over. Then Bitcoin broke 60K with conviction, and in the next 3 weeks, BTC ran to 68K. That's a 13% move. XRP went from 90 cents to $1 42 hours in the same window. That's a 58% move. Bitcoin led, XRP exploded. Second example, March 2025. Bitcoin was grinding sideways at 71K and XRP was stuck at $1.18. Bitcoin finally broke through 74K resistance, and in the following 2 weeks, BTC added 8%. XRP ran from $1.18 to $1.67, 41%, same pattern. Bitcoin breaks resistance, XRP goes parabolic. We're setting up for the exact same thing right now, and if you're not positioned, you're going to be chasing. That brings me to what I think is the most important thing happening right now. The smart money is moving. Let me show you what I'm seeing. Whale wallets holding over 10 million XRP have added over 300 million tokens in the last 30 days. That's not retail, that's institutions, that's funds, that's players who have information we don't have yet, and they're accumulating while everyone else is frozen in extreme fear. Exchange outflows are accelerating. XRP is leaving Binance, Coinbase, Kraken at the highest rate we've seen since January. And where's it going? Cold storage, long-term holds. That's not trading activity, that's conviction. Now here's where it ties back to ISO 222 and the bigger picture. Let me pull up this article from CoinDesk. Latin America's biggest stock exchange now offers options on Bitcoin, Ether, and Solana futures. Right here it says B3, which is Brazil's stock exchange and the largest in Latin America, just launched crypto derivatives for institutions. And if we scroll down, this is the key part. They're not offering XRP futures yet, but the infrastructure they're building is ISO 222 compliant, which means when they do expand to settlement tokens, XRP is the first in line. This is how adoption happens. First, the infrastructure gets built, then the regulatory framework gets locked in, then the products launch. And by the time retail figures it out, the institutions have already been accumulating for months. Let me pull up this one from CoinDesk. Crypto remains resilient in face of renewed Middle East tensions. The article talks about how despite geopolitical risks escalating, crypto markets are holding up better than equities. And here's what I want you to focus on. Bitcoin ETFs saw $2.7 billion in outflows, but the BTC price only dropped 3%. That's resilience. That's structural demand catching the selling pressure. And XRP is doing the same thing. When macro fear spikes, crypto used to crater. Now it consolidates. That's institutional adoption. That's real money treating this as an asset class, not a speculation vehicle. Now you understand the setup. Here's what I'm actually watching going into the rest of this week. Wall Street and macro are the big picture here, and it's driving everything. The S&P closed down 0.28%, Dow down over 1%, but NASDAQ was green. That's a risk-off rotation where investors are dumping industrials and cyclicals and piling into tech. And crypto, especially XRP, is starting to trade more like tech than like a risk asset. When NASDAQ is green and the Dow is red, that's usually good for crypto. The correlation isn't perfect, but it's strong enough that if NASDAQ continues to hold up, crypto has room to run. Gold is at $4,109 up, almost 1%. Silver's up 1.76%. Those are fear hedges, and when they rally with crypto, it tells me the smart money isn't running from risk. They're rotating into non-sovereign assets. They're getting out of dollars, getting out of government bonds, and putting money into assets that governments can't print. That's gold, silver, Bitcoin, and XRP. This is the macro tailwind that people aren't talking about enough. When central banks are stuck between inflation and recession, and fiscal policy is maxed out, the only assets that win are the ones that exist outside the system. XRP is one of them. Now let me talk about one altcoin that's doing something interesting today because it connects back to the XRP narrative. Avalanche is up over 4% and it's the top gainer in the top 20 today. Why? Because Avalanche just announced a partnership with a major cloud provider to build enterprise blockchain infrastructure, and the use case is cross-border payments and tokenized assets. Sound familiar? That's Ripple's playbook, and here's my take. Every time an altcoin validates the real-world utility narrative, it makes the case stronger for XRP because XRP is further ahead on that roadmap than anyone else. Avalanche is just now building partnerships that Ripple signed 3 years ago. When the market finally wakes up to that gap, the repricing is going to be severe. But let's play devil's advocate for a minute because this is the risk check you need to hear. What's the bear case? What would make me change my mind on this setup? Here's the truth. If Bitcoin breaks below 60K with conviction and holds below it for more than 3 days, this entire thesis is off the table. That would signal that the macro risk off trade is intensifying, and in that scenario, everything sells off. XRP would likely test 0.95, maybe lower. Second risk, if the SEC appeals the Ripple ruling or introduces new enforcement actions targeting exchanges that list XRP, that regulatory uncertainty comes back and the institutions pause. That's a real risk. We've seen it before, and it's the one thing that can override bullish fundamentals. Third risk, if validator support for the XRP ledger upgrade falls apart, or there's a technical failure in the rollout that breaks the trust that institutions have in the network. Unlikely, but it's a tail risk you have to acknowledge. So my line in the sand is $1.05. If XRP closes below that on the daily, I'm re-evaluating. Until then, I'm holding my conviction. Now let me give you my 3 scenarios: bull case, base case, bear case, with exact price targets and the triggers for each. Bull case: Bitcoin breaks 65K with volume, SEC drops any remaining appeals, and the XRP ledger upgrade goes live without issues. In that scenario, XRP runs to $1.48 within 30 days. That's a 35% move from here, and it rhymes with every other breakout we've seen when fundamentals and technicals align. The trigger is a daily close above $1.15 with volume over 2 billion. If you see that, the breakout is confirmed and you're chasing if you wait. Base case: Bitcoin chops between 60K and 65K for another few weeks. Macro stays mixed, and XRP continues to consolidate in this $1.05 to $1.15 range. In that scenario, we're looking at a slow grind higher, maybe $1.22 by the end of the month. It's not exciting, but it's profitable if you're accumulating the dips. The trigger here is Bitcoin holding 62K as support, and XRP defending $1.08. As long as those levels hold, the base case stays in play. Bear case: Bitcoin breaks 60K to the downside, macro fear escalates, and we get a risk-off liquidation event across all assets. In that scenario, XRP tests 92 GU, maybe 0.8. If it's really bad, that's a 15 to 20% drawdown from here. The trigger is a daily close below 1.05 on XRP or 60K on Bitcoin. If that happens, I'm moving to cash and waiting for the reset. Which one do I think is most likely? I'm leaning 70% probability on the bull case, 20% on base case, 10% on bear case, and here's why. The fundamentals are too strong, the accumulation is too obvious, and the macro setup favors non-sovereign assets. The only thing that derails this is a black swan event, and you can't trade around black swans. So here's what I'm doing. I'm holding my position, I'm watching that $1.15 level like a hawk, and if we break it with volume, I'm adding. If we break below $1.05, I'm cutting and waiting for a better entry. That's the plan. This is also why I keep my own XRP off exchanges in cold storage on a ledger. Links in the description if you want the one I use. Here's the bottom line. ISO 222 isn't a future event. It's the present reality that most of the market is still sleeping on. While everyone's distracted by price action and fear indices, the infrastructure that runs the global financial system is being rebuilt, and XRP is getting wired into it at the protocol level. When banks, governments, and institutions finally flip the switch and start settling trillions of dollars on these new rails, the price discovery is going to be unlike anything we've seen. And by then, the XRP you could have bought at $1.11 is going to be a memory. If this breakdown brought you value, go ahead and hit that like button, drop a comment down below with your XRP price target for the next 30 days. And if you haven't subscribed yet, hit that button and ring the bell so you're here for every update. As always, it is a blessing. I'll see you in the next one.